What's up, guys? Welcome back to the channel. I'm Ty. This is Stock Muscle, and today I wanted to talk to you guys about streaming services. We all know streaming is the next wave. It's the current wave, I should say. We know who the big three players in the space are already, but there's a battleground at number 4. Let's take a look at two companies to see if we can determine who's going to win that 4th spot. Stay tuned, guys. What's up, guys, and welcome back to the channel. Thanks for dropping in. So today is the first in a series of videos that I want to do, and these are gonna be versus. I want to pick company against company, and I wanted to talk a little bit about streaming. I'm looking at the streaming companies. There's a battleground going on right now for these streaming services. We know who the big three players are. We'll go through them, but there's a battleground at number 4, and I think it's going to come down to either Viacom CBS or it's going to come down to Discovery. I looked at both stocks today. I've been looking at Discovery for quite a while. I actually thought about taking a position at $36 per share, but I decided to wait. I'm glad I did because it looks like the stock has pulled back quite a bit, but it's kind of fallen into that $30 to $20 range, and it's starting to look really cheap, especially when you consider their long-term growth prospects. So let's talk about that a little bit. So what recently happened with Discovery is AT&T is spinning off their Time Warner assets, and they're going to merge them with Discovery. So I heard somebody say that Game of Thrones is going to marry 90 Day Fiancé, and I thought that was a really cool way of putting it. But for Discovery's long-term growth prospects, it looks like the market is just not appreciating what the future is going to look like for a company with such a strong brand portfolio. I mean, Discovery's going to own Batman. Discovery's going to own Superman. Discovery's going to own Game of Thrones. Discovery's going to own 90 Day Fiancé. It's just a really strong family of brands. Now, I work in the TV advertising business, and I think very highly of both companies. Viacom owns a very strong portfolio as well. They have networks like BET, they have networks like VH1, and these networks have shows that still do pretty good ratings live. They pull in pretty good ratings live. But nonetheless, let's do a comparison because I'm considering adding one in my portfolio, and I want to see which one is the cheapest and which one has the most growth potential. So let's dig in, guys. You know what we do here. We don't consider any companies until we look at the fundamentals. So the first thing I want to look at is the price per share. What does each stock cost at this point? So Discovery, which is the blue line, is trading at $30 per share. Viacom is at $41 per share. Okay, we got that. Second thing we want to look at is the market cap. Now, the reason we look at the market cap is because, and I say this to you guys all the time, when you're looking at buying a stock, pretend that you're a billionaire and you're going to buy the entire company. So price per share is not that important. What is important is the market cap. What would it cost you to buy every share? And the reason I advise you to have that thought process is because when you buy one share of stock, you're an actual owner of the company. Let that sink in for a minute. You're an actual owner of the company. Stocks aren't it's not monopoly money like some people treat it. You become an actual part owner of a company. So when you're looking at stocks, take the mindset that you're going to buy the whole company. So Discovery's market cap currently is $15 billion. Viacom's market cap is $26 billion. So Discovery looks markedly cheaper. Now, number 3, we will always want to look at the money that's coming in. The top is going to be Discovery, bottom's going to be Viacom. So currently, Discovery's doing $10 billion in annual revenue. This is a trailing 12-month number, and they're keeping about $1 billion. So $10 billion in revenue, they keep about $1 billion. That's solid. That's a solid 10% profit margin. Anything below that is a concern, but 10% is pretty good. It looks to be the same with Viacom. So they did about $26 billion in revenue. They kept about $2 billion. So about 10% profit margin. And that may be what it is for these media companies. Remember, they're very capital intensive. They have to produce content. They have to hire actors. That costs a lot of money. Discovery Warner came out and said that they plan to spend about $20 billion in their first year of being merged on new content. So think about that for a minute. It costs a lot to produce shows. It really does nowadays. Next thing we want to look at is free cash flow. Like I said, we want to make sure that the companies we buy have strong cash positions. Why? Because a company with strong cash position can do what for me? They can buy back shares. They can enhance my shareholder value by doing that. B, they can acquire a company that's going to make the company even stronger. C, they can pay down debt. D, they can do things like produce new content, new hardware, new software, and things like that. They can do things to make the company grow and be more profitable, and they can also make investments. So we want companies that have cash, because companies with cash can do things for me as a shareholder that companies without cash can't. They'd have to raise cash, which in many situations would end up hurting me as a shareholder. But nonetheless, so Discovery's free cash flow is currently at $2.2 billion. Viacom's free cash flow is at $3.2 billion. So both companies have cash. On a comparison basis, I like Discovery's cash position a little bit more, because what you want to do is compare it to the market cap. You want to look at cash. You want to look at free cash flow to their market cap. And I think Discovery's is stronger at this point. So I think the clear winner in the debate is going to be Viacom. So Viacom does better revenue, same profit margin, higher net income. The shares are a little bit more expensive, but I think the clear winner in this short debate is going to be Viacom. But if you pulled my coat and made me buy a stock, I would probably go with Discovery. So let's get into why. Anytime you're buying a stock, I think both companies are sound. They're both doing everything well. They're bringing in revenue, net income's there. I looked at the balance sheet. The balance sheet looks good. Both companies are doing things really well. But I'm going to go with Discovery because the company's good, and I really love the long-term growth prospects. And let's look at the streaming ecosystem right now. Let's see where we currently are and why I would pick Discovery over Viacom. So the first thing we want to look at is who's the big dogs in the streaming industry right now. And I think we know where we're going with this. Number one is going to be Netflix. They're the big dog, 200 million subscribers. Nobody's going to supplant them anytime soon. They have some of the hottest, most talked about shows in the country. It's going to be really hard to top Netflix. They're number one. Number two, it's going to be Amazon. Now, in my opinion, Amazon kind of stole this position because what they did with their service is they gave it away for free as a part of their Prime membership. Very clever way to kind of get your to kind of piggyback off an existing popular service to promote a new one. Very clever way to do that. But Amazon's number two. They have about 200 million subscribers. Number three is going to be Disney. Now, Disney, in my opinion, is going to at some point challenge for that number two spot. We can't live without our Star Wars. We can't live without our Marvel. At least I know I can't. You know, I'm a big Mandalorian fan. I love my Star Wars, love my Marvel shows, WandaVision, etc. And I think ultimately Disney's going to challenge for that number one spot, and maybe even at some point, that number two spot, and maybe even at some point they may come for Netflix with that number one spot because the popularity of their brands is unprecedented. So here's where the battle is, guys. Number four. So the reason I would go with Discovery, and this is a very compelling reason, is HBO Max is already the fourth largest streaming service in terms of subs. So like I said again, HBO Max is going to merge with Discovery. They're already there. You know, I said there was a battleground, but to be quite honest, HBO is already there. And I think going forward, what it's going to do is just strengthen HBO Max's position. The name of this service is going to change, but they're just going to strengthen their position because, you know, like I said, Discovery owns some very popular brands and very popular shows. The 90 Day Fiancé suite of shows is very popular. The Animal Planet, Shark Week, all of these things are going to become one family of brands. They're at 44 million subscribers now. I could easily see that becoming upwards of 100 million plus subscribers, and that should solidly place, the Discovery Warner Media Company in number four there. And going through this list, Viacom service, which is called Paramount Plus, it was mentioned very briefly, but is it a real challenger at this point? So all things considered, I think the clear value is in Viacom. But I would go with Discovery because I think the long-term growth prospects for Discovery are much more compelling than Viacom. So leave a comment, guys. Let me know what you think. Let me know if you think I'm crazy. Leave a comment. And if you like the content, please hit subscribe, hit the like button, and show me some love in the comment section. Let me know what you guys think. So that's all I got on this topic, guys. I'm out of here. Thanks for dropping in.